Welcome. This is Mike Hamilton from Trade the Easy Way, and I'm looking at the Nasdaq as I think and prepare for the week ahead. We're already into Tuesday. I'm producing this at nearly 1:45 lunchtime, Tuesday London time, nearly 7:45 New York in the morning. All right. So what we've got here, what the Nasdaq does, the rest of the market follows. So we've had a couple of pushes higher up here into this 2021 lows. Every time you hit an area of resistance, it gets a little bit weaker. So if we hold this 20-day average and we have another attempt at this 12,200 on the Nasdaq, then the chances of this pushing through and through is high. Sometimes it takes a fourth go. I'm still expecting a bounce. I'm still very short-termism about this market, but I think the volumes and the patterns suggest that we can at least get some sort of temporary reprieve to this very bearish market. So we need to be very cautious. If, of course, that doesn't work and we start closing underneath this 11,750, then we're going to come and test the 2022 lows and potentially make even new fresh lows. So let's cut across quickly to the FTSE. This is the March push up here. I think the FTSE overall has actually done very well. We've got UK GDP tomorrow. We've got the US inflation today, and earnings in the US starts on Thursday with JP Morgan and Morgan Stanley, and then Friday US retail sales. So that is shown in the way in which we are at this important juncture in these markets. And the DAX is similar. We are not through 2021 lows, and in fact we are not. We're a little bit further away from them. Right, so this, and we're not above the 20-day average. We just tested the 20-day average, and we're at the moment heading lower. So all this data to get out of the way yet again, and the markets are still not punching higher. This is the problem, and the problem is this strong dollar. This is the dollar basket, of which the euro is the biggest component. All the time this dollar stays higher, it's going to punish the US markets and cap the potential for other markets to push higher as well. This is the Chinese market. So that's been on quite a decent recovery run into February resistance. And the Japanese market, let me just find the Nikkei. Japanese market is similar to the Northern Hemisphere markets, okay? So dollar strength is pegging the gold back. So the gold has just come back into October lows, September lows, with that inflation ahead of us, and oil is equally. This is cyclically. This is the time of year for oil to come off anyway. So I would expect this to pull right back, and then we normally get a push in early to mid-autumn, and then a reset at the beginning of the year. Okay, so oil at the moment looks lower. We could, but if we break this 93, we could come and find this 87 support, potentially even lower if we break this support. Okay, so commodities have come right back, which should potentially give the markets a reprieve. Even the wheat was at $13.40. That has recently touched $7.90, and even natural gas has pulled right back. Now that's okay. That's had a recent bounce. Okay, so let's go across to the UK markets. Let's look at some big retailers quickly. Tesco's. The volume is coming off. Lower. It's got to be lower. It's above the 20-day average. So all eyes on GDP tomorrow, I think. Sainsbury's struggling. because if we can come and see 200, if we break 200, we're in trouble. Let's cut across the airlines quickly. EasyJet, lower. British Airways, etc., lower. Boo, right on the floor again. Card Factory that I've been shorting, came out the short, are getting still under the 20-day average, so I would dearly love to get a much higher number, 55, 56. Shoe Zone is not giving me an entry either. I'm looking to short Shoe Zone about 180, 185. I noticed there was a broker's recommendation to buy Persimmon. I personally don't like it. We have got some pin bars here. The volume is picking up, so there is some sign that this could see a lift, but I would be very, very cautious. If we look at energy, Tullow has taken a bit of a tumble. That's coming off of the 40 mark. I don't rush into this. If we see a pullback to 42, I think this is a good place to get in, with the potential to get back up to those highs of 60, 65. I mean, the last time we did this in December, we did another retest of the lows, and I think I wouldn't chase the market. So I would be interested in Tullow at 40, 41. Other ones, let's have a look. Wow, that's been on a lovely run. That's a really smart move. I didn't take this, and I am regretting it. SQZ. That's we pulled back to 273. We're currently 350. Wow, well done, anybody who's taken that. I'm just so cautious at the moment. I have not been able to engage that one. And Elementis, I am in this at the pound mark, but it's not going anywhere at the moment. Volumes are okay, but not great. So if this drops underneath 95, I'm out. Let's have a look at the bank. Barclays has pulled back. At the moment, that looks lower. That could come and see 140, 142 at the moment. Don't like anything else in that sector. So this is why I'm relatively quiet at the moment in the Telegram alert room and chat room. Just very, very cautious. You know, here we are, well and truly into the summer months, and just sitting back until we get some more confirmation from this data. If you want to come into that Telegram room, drop me a line and I will send you the link. Tread carefully, be very careful, and I'll update this service as and when there's more data, but I will do a midweek and then another repeat of this prep next Monday. Brilliant. Apologies for those of you who logged in yesterday. I felt unwell later afternoon, but not quite sure what happened, but it was very temporary, very short term, and I'm fit as a fiddle. So catch you soon. Thanks for listening. Bye for now.